Good afternoon, everyone. And I'd like to, first of all, thank Martin for laying down the foundation on gold and why gold is great for me ahead of this presentation. So full disclosure, this is my first time presenting the Wallbridge story. So I apologize if I stumble over anything. And I also just got here yesterday, so I'm not quite on your time zone yet. So moving on. Of course, we all do have these forward-looking information slides. You can read them at your leisure, and I hear they're great at bedtime, especially. Before I actually get into Wallbridge a little bit deeper, I want to talk quickly about the region that we're in and the Abitibi Greenstone Belt. So Fenelon and Martiniere are the two projects that Wallbridge owns that I'll be talking to you about today. Fenelon is a PEA level project, Martiniere a little bit further behind, advanced exploration. But what's to note here is that we are next to Detour Lake, which is Canada's largest gold mine. If I didn't mention it, we are, of course, in Quebec, Canada. And what this slide kind of points out to is the difference between the northern and southern regions of Abitibi. So as you can see along the south here, the yellow boxes represent gold deposits. It's been a lot more explored, a lot more production has come out of the southern Abitibi. As you can see, 206 million ounces of past production in the southern region. In the north, 15 million ounces of past production. The geology is similar, and as you can tell by all of these towns here, there's a lot more infrastructure in the south than there has been in the north, which explains why there's been more production coming out of the southern region, but we think that's going to change, and certainly with Detour being just down the road from us. A little bit of a closer look on Fenelon and Martiniere here. So Fenelon is 30 kilometers to the east of Martiniere and Detour over here. So past production from Detour is 671,000 ounces in 2024. Fenelon, we've just recently put out a updated mineral resource estimate and an updated PEA. And then Martiniere, again, like I said, further behind with only about 300,000 meters of drilling on it. So now I'll take a brighter look at Wallbridge. Shareholders of note, Agnico Eagle owns just over 10%. Eric Sprott owns just over 15%. And of course, as an exploration and development company, we do have significant dilution. The company itself has been around for over 25 years and has evolved from various stages to what it is today, which I'll go into a little bit further. These are in Canadian dollars, by the way, so our 52-week trading average is between 5.5 cents to 11.5 cents Canadian. Our market cap is at about 60 million Canadian dollars. We are covered by two analysts, Andrew Mikachuk from BMO Capital Markets and Don Blythe from Paradigm, both Toronto-based analysts, and we do trade on the Toronto Stock Exchange, one of our sponsors for today's conference. So I do want to spend a little bit of time talking about the board and the team, particularly Brian Penny, who would normally be delivering this presentation. He doesn't talk about himself as much as I'd like him to when he's presenting, but he's actually the first CFO of Kinross. He's been in the business for over 30 years. He's a CPA, so he brings a financial level of expertise to the business. We've got Janet Wilkinson, who's an HR expert. Brian Christie, who was with Agnico Eagle for years and years, so I guess he's our Agnico representative. He's retired from Agnico, but still consults. Danielle Giovanesso, she's a geologist based in Quebec. Michael Pessner with a financial background. Jeffrey Snow most recently comes to us from being general counsel at IM Gold. Mary Montgomery, our current chief financial officer. She's been with the company about 25 years. Mark Peterson, his title is geological consultant, but for all intents and purposes, he's really our VP of exploration. And he's really more of an economic geologist, really looks at what's economic as far as what we have in the ground, and worked previously with Brian at New Gold. Myself, I started my career in investor relations about 20 years ago ironically, at Detour, when Detour was just Detour Gold, before it was Kirkland, well before it was Agnico, when it was just an exploration company with 3 drills in the ground. So when this opportunity came up and I realized I was going back to the same jurisdiction, I kind of felt like it felt right. And it is a jurisdiction that is great to work in as far as Quebec in Canada for mining. Karen Duffield, she is our Director of Human Resources, and Sean Stokes, our Corporate Secretary. Goes without saying that ESG is of utmost importance to us. We've got 3 First Nations groups in the area that we consult with on a regular basis. Health and safety, of course, our top priority. We are currently working on our 2024 sustainability report, which will be out soon and available on the company's website. So just a little bit about the major milestones of the company and where we are today compared to where we started. I'm only going to go back to 2019. Like I said, the company's been around for 25 years, but I'm not going to get into that much history. But basically, Area 51, the Tabasco and Cayenne zones, those are in Fenelon. So that discovery took place in the first quarter of 2019. In May of 2020, Wallbridge acquired Balmoral Resources, which is how Martiniere came to be a part of Wallbridge. In November of 2022, we divested all of our nickel assets and changed the focus of the company from a nickel exploration company to a pure gold exploration and development company. Where we are today, in March of 2025, we recently updated our PEA at Fenelon and did a mineral resource estimate at Fenelon and Martiniere, of which I'm going to get into more detail going forward. So I'd like to spend a little bit of time talking about the preliminary economic assessment that just came out for Fenelon in March. And it's worth noting that this is an updated PEA. There was one done on the property under previous management in 2023. This one was done with a bit of a different approach, which I'm going to get into, and recently just recently published at the end of March. So pretty fresh numbers. Our annual gold production is expected to be 107,000 ounces over a 16-year mine life with a free cash flow of $120 million annually. What's important to note is our initial capital will be $579 million, which is about $66 million less than the previous PEA had reported. And I will talk a little bit about why the new approach, why the lower capital. After-tax internal rate of return of 21% and all-in sustaining costs of just over $1,000. This presentation is available on the website, and I also have some extra copies. This is just a copy, statement of our mineral resource estimate, so I won't get into all of these numbers, but you're free to peruse them in more detail. So the new PEA approach, really what when I say new management, Brian's been the CEO for the last 2 years, but prior to that, he was the CFO. So when he took over and made the decision to do a new PEA, we really took a look at it as a new project, starting with a clean slate, with more realistic costs, to be perfectly frank, and with a smaller mill and smaller production. And the reason for that is to get to production sooner and to be able to raise the money to actually build the project a little bit more easily, and with the capability of it to be expanded as necessary, or if the gold price continues to go up like I believe it does, many of us do, we have the capability to self-fund and expand and increase production at Fenelon. So just our project phases here will be 2 years of pre-production, 1 to 15 years of production, and then a ramp down at years 15 and 16. This slide is really just to illustrate our closeness to power and our surface infrastructure, illustrating our mine site and camp. Pretty simple metallurgy and a simple flow sheet here as well. And the capital allocation for the PEA, again, I'm not going to get into all of these numbers here, but the main what's main here is that our initial capital is $579 million, with an all-in sustaining cost of just over $1,000. So what I like about this slide, and why I spend a little bit of time on it, is while our production is 107,000 ounces average annually, the first 5 years of production sees us producing over 120,000 ounces. And so the approach here would be that if gold continues to maintain its strong price, once we do get into production, we can use our revenue at that point to expand and increase production ourselves. After an average after-tax cash flow of $120 million per year, starting in year one of production at 115. And then I'll just spend a couple of seconds here on the sensitivity analysis. Our PEA was done at a base case of $2,200 gold. As you can see, at a $3,000, at a $3,000 gold price, our IRR goes up to 34% from 21%. So as we all know, we're sitting at around that price today, but we conservatively did the PEA at 2,200. I did keep this slide here in order to just be able to talk a little bit to the comparison of the last PEA to the one this year. Again, I won't go over all these numbers. What's really worth noting is the difference in the initial capital that will be required. And of course, like I mentioned, there is a lower annual production to start from the last PEA, but the goal is to be able to get to production sooner and then self-fund an expansion or expansion and or increase in production. Our PEA study team was quite impressive. Mayhew Performance came on a couple of months before the PEA was complete just to oversee the process, and they were brought to us by Tony McCooch, who was at the time the chair of our board. If anyone's familiar with him, he's the CEO of Discovery Silver. And Mayhew Performance also worked on the big acquisition that was recently done by Discovery. So PEA, the Fenelon PEA really is a platform for growth and an opportunity to unlock district scale opportunity in Quebec. We're planning on delivering value to shareholders. We wanted to de-risk the project and make production more achievable. And we're, of course, in a premier location, as I've already mentioned in talking about Quebec. And, of course, we've got ESG advantages from the location that we operate in. But, of course, that's not all. We also have the Martiniere project, which, like I mentioned, is behind the Fenelon project as far as exploration and development. 300,000 meters of drilling has taken place there already since we acquired it. What's worth noting is that this year we will be doing a 15,000 meter step-out exploration drilling program here. The results of the first phase of this exploration will be coming out in the next couple of weeks, the first half of the program, that is. And I am not a geologist, so I am not going to get into the long section, but if anybody is and would like to talk to our head of geology, I am more than happy to make that introduction. But I know just enough to make myself dangerous when I start talking about how excited I am about Martiniere. And finally, in conclusion, really just Wallbridge, like the previous speaker, Martin, also said, undervalued as many explorers and developers in our gold space right now. I think it's an opportunity and a great entry point to the story personally. We're growing our resources at Fenelon. Martiniere should also be noted here. We do have a very strong technical team. And again, I can't say it enough, Quebec and Canada is a premier location to be exploring in and developing in with a always prominent ESG focus. I'm happy to take individual questions during the break if anybody has any. I think we are a little bit over for time, but I'll be around and happy to answer any questions. And also just want to note that Brian Penny will be in town next week at the one-to-one conference. So if anybody wants some CEO FaceTime, I'm happy to make that arrangement as well. Thank you very much.
Thank you.